Every single options trader, sooner or later, runs into the exact same two problems. First, what on earth do you do when a trade just goes against you? And then there's the other side of the coin. What do you do when a trade is a massive success, like way faster than you expected, and just letting it sit there feels like a waste? Well, believe it or not, the answer to both questions is exactly the same. It's all about learning the art of the roll.
All right, so here's our game plan. We're going to break down what option rolling actually is. Then we'll look at the two different ways to think about it. We'll cover the two golden rules you just can't break. After that, we'll tackle the biggest question of all. Should you roll or just cut your losses? And to wrap it all up, we'll give you a simple checklist to make the right call every time. Okay, first things first. Let's get under the hood a bit and really understand the mechanics here. What are we actually doing when we say we're rolling a position?
So at its core, rolling is really just a tactical move. Think of it this way. You're not bailing on the trade completely. Nope, you're just adjusting the terms of the deal. You're either tweaking the strike price, buying yourself more time for your thesis to work out, or sometimes both.
Now, I know what you're thinking. Wait, that sounds like two separate trades. And yeah, technically, you're right. You're closing one and opening another. But here's the cool part. Modern trading platforms are smart. They bundle this up into one single, seamless order. And that's a huge deal, right? Because it means there's no risk of the stock price jumping around while you're fumbling between the two transactions. Plus, it usually saves you a bit on commissions, which is always nice.
Okay, this is where it gets really interesting. It doesn't matter how complicated your position is, every single roll you could ever possibly make is going to fall into one of two buckets. It's either an attack move or a defense move. That's it.
And this chart just nails the whole idea, right? You've got two completely different mindsets. Defensive rolling, well, that's reactive. It's what you do when a trade is in trouble. It's like a tactical retreat, You're trying to fix things, manage your risk, maybe buy a little more time. But offensive rolling, that's the fun stuff. That's proactive. It's for when your trade is already a big winner and you want to press that advantage, lock in some profits, and make your money work even harder. All right, before we dive into the nitty-gritty tactics, we need to talk about two golden rules. These are totally non-negotiable. Seriously, they're the foundation for every single good rolling decision you'll ever make. And here's the big one. If you are rolling to defend a trade that's going against you, you absolutely must roll for a net credit. I'll say it again. The market has to pay you to make the change. Why? Well, think about it. You're taking a loss on the first position and moving into a new one that's, by definition, a little bit riskier. That credit, that's your payment for taking on that extra risk. Simple as that. Let's make this real. Here's a quick example to show you the power of that credit. So imagine a trader sold a put. Their break-even was $98.50. As long as the stock stayed above that, they were golden. But then, whoops, the stock started to drop and their position was in trouble. So instead of just giving up and taking the loss, they decide to roll down and out. That just means they move to a lower strike price and push the expiration date further into the future. And here's the key. They collect a $1 net credit for doing it. Now check this out. By grabbing that credit, they completely change the math of the trade. Their new break-even price is now all the way down at $92.50. That is a $6 improvement just from that one roll. See, that credit isn't just some little bonus. It's the engine that fixes the entire trade. It gives their original idea a much, much better chance of actually working out. Because let's be honest, paying to extend a losing trade, that's just throwing good money after bad. Okay, this next part is maybe the most important section of all. We know how to roll now, right? But the real million-dollar question is, should you even be rolling in the first place? This right here, this is the ultimate litmus test. It's what separates a disciplined trader from someone who's just hoping for a miracle. You have to ask yourself, is the original reason I got into this trade still valid? If the answer is no, then rolling is just kicking the can down the road. It's delaying the inevitable. Remember, rolling is a tool for when your timing was off, not for when your whole idea was just plain wrong. So what does it mean for a thesis to be broken? Well, we're talking about a major event, something that completely blows up your original reasoning. Think about a disastrous earnings report, some surprise negative news from a regulator, or maybe a key support level on the chart just totally collapses. When something like that happens, the game is changed. The smart, disciplined move is to just close the trade, accept the loss, and save your money for a better fight. I love this quote because it really forces you to look at the decision in a new light. See, a roll isn't just continuing an old trade. It's an active decision to recommit your capital. It makes you ask a really tough question. Is trying to save this trade really the absolute best use of my money right now, compared to every other possible trade out there in the market? All right, let's pull all these threads together now. We can basically boil everything down into a simple, practical checklist you can use every single time you're thinking about rolling a position. So before you even think about hitting that roll button, just run through this quick 4-point check. Number 1, thesis validity. Is my original reason for being in this trade still intact? Number 2, net credit. Am I getting paid to make this adjustment? Number 3, the IV environment. Is implied volatility high? Because high IV is like a tailwind. It just makes collecting those juicy credits way easier. And finally, number 4, capital efficiency. Is this honestly the best place for my money right now? Going through this process takes the emotion out of it and helps you make a solid, rational call.
You know, a lot of pro traders take the guesswork out of this completely. They use hard and fast rules. For example, on the offensive side, they might have a rule to always roll a position once it hits, say, 80% of its maximum possible profit. And for defense, they might have a trigger to roll if the options delta doubles, which is basically a fancy way of saying the odds have turned against them, or if there's less than 21 days left until expiration, just to avoid some of those late-game shenanigans.
And really, that brings us to the final, most crucial question of all. And it's a question only you can answer for yourself. Your honest answer is what separates a sound, disciplined strategy from just wishful thinking. So you have to ask, am I rolling this because the position is still genuinely viable, or am I just rolling because I can't stand the thought of taking a loss and admitting I was wrong? Answering that question with total honesty, well, that's the true art of the roll.
All right, the learning doesn't have to stop here. If you want to explore even more, I've built the perfect place for you at sophie-ai-finance.com to unlock a new way of learning. Think of it as your personal learning toolkit. If you just want the big picture, you can watch the video or listen to the podcast. It's perfect for getting the main concepts down while you're on the go. But if sometimes you need to hit the pause button and really let an idea sink in, you can visit the blog article. It has all the details, charts, and text from our discussion so you can review everything at your own pace. And for those of you who want to see all the math, data, and the complete nitty-gritty behind the analysis, well, I've got a full research paper waiting for you, so you can really dig into the details and see how everything works under the hood. It's all there, all for you. And hey, if you have any ideas for new topics about finance and AI you'd like me to cover, please leave me a message. Thanks for tuning in, and I'll see you in the next video.